those of you who've been following this series would be aware that till now we've been talking about the preparedness for getting listed and what an organization who is looking to raise money, what are the considerations that they need to keep in mind? So whether it is from impact, whether it is from your sort of your regulatory frameworks, also when we spoke about the sort of program information, while all that has been covered, this session really focuses on the other perspective, which is equally, if not more important, which is the primary purpose why we're all looking to get listed, which is the investor perspective. So what are the investors' perspective? What is their perspective when they're going to be looking into organizations, and what are their considerations for funding? Now, none of the nonprofits here are strangers to funders' expectations and considerations, right? Each of you definitely interact with funders, you raise money, and you know what is required. Nevertheless, with the exchange bringing in certain principles of a commercial stock exchange, there could be a slight variation in that perspective. And joining us today, who will be the expert session facilitator, I'm pleased to invite Mehul Jain at Barucha & Partners. Barucha & Partners has been a long-standing institutional partner with Social Lens, and Mehul brings a lot of rich experience and expertise from capital markets, and has been a passionate and a diligent follower of the new mechanisms of social capital and financing options which are opening up in this space. And so, Mehul, welcome, thank you, and over to you.
Thank you for the introduction, Vijay. Good evening, everyone. So today's session, I'll be focusing on three aspects of the social stock exchange, which are critical aspects. First is the investors who are eligible to invest in social stock exchanges. Second is the process of listing zero coupon, zero principal instruments which are issued by your non-profit organizations. And last are the disclosure requirements which are applicable to listed social enterprises. Of course, as we have previously discussed, the regulatory framework on social stock exchange is still evolving. There are a lot of developments that are happening in this space. Recently, SEBI has constituted a committee to overhaul the regulatory framework and recommend improvements in the framework. Your BSE has been granted recognition as a social stock exchange. So there are a lot of developments that are happening in this space. So according to the discussion that we'll be having today is on a subject which is still evolving, and we will of course have to track these developments as and when they happen. So I will start with the discussion on the investors who are eligible to invest in social stock exchange. So currently, per the regulatory framework, only non-institutional investors and institutional investors are permitted to invest. Accordingly, your retail investors who invest typically less than 2 lakh rupees will not be eligible. When I talk about the institutional investors are your sophisticated investors who have experience in financial markets. These are your mutual fund houses, your venture capital fund, your alternative investment fund, including the social impact fund. That is a new construct that has been introduced by SEBI by amending the AIF regulations. Social impacts funds have been permitted to be introduced, and scheduled commercial banks. Then when I talk about the institutional investors, also include your family trust and the intermediaries which are registered with SEBI, both of which have a net worth of more than 500 crore rupees. So these are your institutional investor space. And the non-institutional investor space are the investors who typically invest more than 2 lakh rupees. These are again your financially savvy investors who have a higher risk appetite while investing. The regulatory framework, of course, mentions that SEBI may introduce any other class, permit any other class of investors to invest. So we'll, of course, have to track that. Moving to the next part, which is the process of listing zero coupon, zero principal instrument issued by the NPOs. So currently, the regulatory framework only envisages ZCZPs, which are issued by NPOs, which can be listed. Of course, SEBI may in the future notify other instruments which can be listed, and that is something to be tracked. But the process which has been specified in the regulatory framework is akin to what you'll follow in a usual capital market raising process for an equity or a non-convertible instrument, such as the process involved in your IPO or your rights issue. It's very similar to that process. So what the process is effectively that your NPOs, which are registered with social stock exchange previous to listing, they can undertake a public issue, and they will have to prepare something called a fundraising document, which is the offer document on the basis of which investment will happen. This fundraising offer document will, of course, have to carry certain minimum disclosures, which I'll just discuss. And these are the minimum disclosure requirements, which will have to be elaborated in detail. Of course, these are minimum disclosure requirements which have been specified by SEBI. Social stock exchanges can additionally add on to these disclosure requirements. Broadly, your fundraising document will have to set out the vision of the organization, which is what is the purpose of the organization and why the cause which has been taken up by the organization matters. Right? That is something which the investor will be very keen to know, that what is the purpose of the organization, the vision of the organization. Second will be what is the target segment that the NPO is proposing to target and address. For example, if an organization is focused on eradication of hunger, poverty, malnutrition, or promoting education or livelihood, or development of slums, then what is the target area of the population that you're targeting, and what is the, for example, gender, what is the, if you're targeting women for the development you're targeting, that will have to be disclosed in the offer document. Other disclosure item will be composition of your governing body in the key managerial personnel. Your financial statements for last 2 years will have to be disclosed. These financial statements will, of course, have to be prepared in accordance with the guidelines laid by ICA, which we had discussed previously. Your other important disclosures will be the risk that the organization foresees in its operation and how the organization intends to mitigate such risk. So that's a very crucial chapter in your offer document, and that is something the investor and more importantly, the regulator will look at. And the last point, last important disclosure will be the social impact of the organization. To a certain level, this will be something which you will mention in your annual impact reports. That is something we discussed in the previous session that are required to be prepared. And you'll have to highlight the social impact that the organization has. Now, those disclosures will then be made in your offer document. So as I was mentioning, other than the disclosure and vision, target segment, and the social impact, the other disclosure which I was discussing, and as you can see on the screen, are similar to what you would see in an offer document for an IPO or rights issue. The disclosure of vision, target segment is, of course, because of the nature of the organization and the work that is being carried out in the space. It's because the NPOs are, the social enterprises are being other people who will be raising funds in this space. Once you prepare the offer document, you'll have to file it with the social stock exchange for its observation and comments. There is a 30-day time period which has been specified and within which the social stock exchange have to get back to you with your comments. Typically, what we see in the equity capital raising process is that 30 days generally extended because of the number of queries and the clarification that the social stock exchange asks from us, and the responsiveness of the company or the institution who's raising funds will also matter a lot when you're providing observations. The fundraising document that you will prepare will also be uploaded on the website of your organization and the social stock exchange for a period of 21 days, so that public can also provide comments. Now, once the comments are incorporated in the offer document, the draft fundraising document, you'll file a final fundraising document with the social stock exchange, and thereafter you'll open the issue. So that is broadly the process involved. It is something very similar which we have seen in the capital market space, but it'll be interesting to see what other developments in the social stock exchange may also notify. Now, once the organization is listed, there's certain disclosure requirements which will become applicable to your organization. Again, this is very akin to what a listed company has to do today in terms of the listing regulations. These disclosures are broadly into two spaces. One is event-based disclosure, and other is periodic disclosures. For event-based disclosures, the organization will have to formulate a materiality policy on the basis of which you'll determine the events which will have a material impact. The material impact will be on the planned objectives of the enterprises. Currently, the regulatory framework does not prescribe any thresholds on the basis of which materiality has to be determined. And this is something the organization will have to keep in mind. This will be a very ad hoc policy that will frame, and it will be very institution specific and impact specific policy catering to the particular organization which is framing this policy. Of course, as and when the thresholds are notified by SEBI, we'll have to track those thresholds and update our materiality policy on the basis of which disclosures will have to be made. You will also have to designate one or more of a key managerial personnel to determine if an event has a material impact and is material enough to warrant disclosures to the social stock exchange. The disclosures will have to be made as soon as possible, and SEBI has prescribed a time frame of 7 days within which these disclosures have to be made. The organization also will have to keep in mind that they'll have to provide regular updates on a disclosure that has been made to stock exchanges till the time the event ceases to be material. Of course, in some cases, it may be a one-time update, and in some cases, it may be a continuing disclosure requirement that may arise on that organization. What we've also seen is in the listed space, the stock exchanges have been very carefully tracking the disclosures that have been made by the organization. They tend to raise queries, they tend to ask clarifications from companies. Now, a way to mitigate this would be the disclosure that you're making is complete and adequate and is sufficient enough for the investor to gauge what the event is, and it provides a complete picture of the event, which will reduce the chances of stock exchanges coming back and asking certain queries. Another thing which the framework envisages is that the social enterprise may suo motu also confirm or deny any events which have been reported in the press, in any news reports. But you'll also have to bear in mind that once you start confirming or denying events, that will be a precedent that you set. And it will be expected that you will keep doing that for other news reports that are reported. So it can't be a one-time thing that we deny or confirm one event, but that will be an expectation from the organization that they'll do it for the other events. So that is something which the organization will have to keep in mind the first time they're setting that precedent. Now moving to the periodic disclosures. The periodic disclosures are twofold. First is the annual report, which will have to be submitted to the social stock exchanges within 60 days from the end of the financial year. Your disclosures in the financial report are of 3 categories. One is disclosure of the general aspects, which is your name, headquarters, your operations, your goals, activities, your products that you're offering, etc. And the vision, mission, the purpose that you have, your top 5 investors, top 5 donors. Then the other bucket is your disclosure on the corporate governance aspect. This will be more or less on the disclosure that we were just discussing, the composition of your governing body, your key management personnel, what are the investor grievances that you've received, what is the process of redressal of such investor grievances, what is the process of dealing with related party transaction, any conflict resolution, what is the mechanism that the organization has in place. All of this will have to be detailed in your annual report. Then, of course, your financial disclosures, such as your balance sheet, your P&L, and your cash flow statement, which along with the auditor's report will also have to be disclosed. The next part of it is the disclosure which the NPOs will have to be made, which have raised funds from your public issue. It's a quarterly filing, which is currently envisaged. These quarterly filings will have to be made within 45 days from the end of the quarter. The details which will effectively have to be provided is it's a statement of utilization of funds. Is again something similar to what we see in any equity capital market deal, where you'll have to disclose what is the amount of monies that you have raised, what is the amount of monies that you've utilized, and what is pending, what is unutilized, right? So this is broadly the disclosure requirements that are envisaged. Of course, it's a very unique and novel concept, and quite a lot of developments that are happening, and more developments are anticipated from SEBI and Social Stock Exchange, with the committee being constituted. So all of us as stakeholders should keep tracking these developments. So as Vijay was mentioning, these webinars we're having this so that all of us are ready and prepared as and when the regulatory framework is fully crystallized, so that we are in a position to file offer documents or to get registered with your social stock exchanges.